Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go over real estate, do a real estate market update, see what real estate's doing. Real estate's very important to the thesis of a commodity boom. Every commodity boom that we've seen in history, at least the last couple, has linked itself with an expansionary phase of real estate. When real estate expands, which means that they're building new homes, new single-family homes and multifamily homes, when those are going up, it is inflationary because new loans go against these new homes, which is inflationary. It expands the money supply. That's what we've seen in history. It increases the M2 money supply. Inflation comes but is lagged by about a year or 2 years behind the new homes and the money creation. So it's important to monitor real estate to see where we are in the cycle. And when this inflation comes, what happens is the inflation comes first. Well, the loans come first, inflation comes a year or two behind it, and then interest rates start to go up. People sell bonds, interest rates go up, and interest rates is the trigger point of people buying and selling certain assets. They sell bonds and stocks when interest rates go up, and then they go into precious metals, commodities, and hard assets. So let's take a look at the real estate market. I'm going to give you my opinion here. So let's jump in. I'm going to start with, this is the new privately owned housing unit starts. Anything over about 1.4, you're in an expansionary phase. We are in an expansionary phase. It bounces back and forth up here. We're at 1.534 million, which was updated yesterday. And we're still in good territory for an expansionary phase. We are struggling to move higher, around, much above 1.5 million for a variety of reasons. Labor shortages, the cost of some of the inputs of the materials for homes is scaring some buyers away, and it is slowing down the expansion. Some of those input costs have come down in terms of steel and lumber. So I expect this to be, remain robust and continue, hopefully, to go a little bit higher from where we're at. Home sales prices are up 17% from 2020. I'm looking at the red line for 2020, but prices are continuing to move higher, and it's looking very, very good for an expansionary phase of real estate. In the beginning of an expansionary phase of real estate, people experience, or the real estate market experiences, the greatest gains. What it's trying to do is turn on the housing starts to build more homes, and prices increase the most rapid at the beginning of a expansion phase because inventories are eaten up and people are now fighting for homes, and they decide that they want to build a new house versus buy an existing house because of the competition for homes. Here's the asking prices on new listings. They're up 10% from 2020. You can see that 2019, 2020, we're just continuing to move higher and higher. Pending sales are up 10% from 2020, so sales are up. That looks good. Be careful how some people word some of these sales. Sometimes they say sales are falling, but that's pretty normal because there's a seasonality to real estate. It usually goes very well from the beginning of the year to about June, July, and then it peaks out and starts to head lower throughout the year. So I'm expecting sales to go down a little bit from seasonality. New listings of homes are up 3% from 2020. So this is new listings. So we're up a little bit. It was pretty tight in 2020. But overall, this is pretty low, I think. Just overall, in compared to demand. Active listings for homes for sale down 24% from 2020. This is your inventory. This is the 4-week rolling average of weekly active listings. And active listings is really your inventory that is available for someone to purchase. So we are continuing to draw down our inventory over time. And we are down 24% year over year. So we have very tight inventories. 50% of pending sales under contract within 2 weeks. So this is a very fast, or a great percentage for a pretty quick pending sales. 36% of pending sales under contract within 1 week, which is higher than the other years. So we're seeing 1 week is higher and 2 weeks is higher for pending sales. Days on the market increased to 18 days, but it was incredibly low, and you can see the seasonality here. So it's looks like it's following the seasonality of 2019 versus the messed up 2020 that we saw. Over half the homes sold above list price, so they 50% are over the listing price of what was asked. So competition and bidding wars. Over 5% of listings had price drops. So price drops are increasing a little bit. Sale to list price ratio drops further below 102%. This is probably one of the most important metrics, the sale to list price. And we're in a very good, solid market, much more so than 2020 and 2019. We are still in a tight market. Redfin Homebuyer Demand Index up 15% from 2020, according to them. So this is the weekly value of Redfin's seasonally adjusted homebuyer demand index. So greater demand with less inventory. Which way do you think it's going to go with greater demand and less inventory? So overall, from what I see, we have a strong housing market. It is still strong. We don't have inventory. I don't see how this thing's going to go down. I just, the inventory is not there for prices to decrease. I see a strong market. I think prices are going to continue to go up, and they will do so until inventory comes on. And the only way I think inventory is going to come on is probably from building it. And right now we've got building constraints. So I see the market continuing to be tight, and I see it continuing to favor the sellers versus the buyers. If you guys like this content, give me a thumbs up. Thanks for listening. This is Finding Value.